Happy Thursday, everyone. This is Ed Crowe. Appreciate you dedicated folks coming on Thursday before a long weekend. That's great. Thank you. We'll get started here in about a minute. Throw a little curveball for things today. We're going to do life insurance, so we'll go over that. We obviously offer all lines of life insurance, and obviously we focus on Medicare, but we certainly do a lot of life, and we get a lot of questions, and we get a mix. There's some people that write life almost every day, but we have more probably that just write it here and there. So that's what this was geared towards, more or less for the person who maybe doesn't write life that often. For those who do write it often, I try to put a few things in there that'll help you because if you're not familiar with our process, kind of what we offer and how you work with us is in there as well. So a couple house cleaning things before we get started. We do record all our webinars. We put them all on YouTube. If you register for the webinar, we'll email you the recording. And again, you can always go on YouTube and watch it. It's YouTube at Crowe Medicare. So you can watch it there as well. If you have any questions, send them into the webinar. I'm going to answer them at the end. Be happy to do that. And today I am going to do a demonstration of the quote site because every agent that works with us, if you have at least one life contract of any type, or even if you have Medicare contracts of any type, you have access to the quote site and all the lines of business on there, so you can quote and write life insurance through it, including term UL, final expense. We have all the IUL carriers and whole life. We have a lot of whole life carriers too, but you can't unfortunately quote those off the quote engine. I'll talk about that more in a few minutes. Last thing, if you get a chance, if you go on the YouTube channel, if you could subscribe. I'm not really saying that for the benefit of the business necessarily. It's so I stopped getting picked on. My 12-year-old loves to look at our YouTube channel and laugh at me and say that it's terrible. And he let me know that the people he watches, one guy is Laser Beam. He has 21 million subscribers. And then this other guy, Mr. Beast, has 140 million. So I don't think I'm going to get there. But let's just try to make Steven quit picking on me so much. And by the way, Mr. Beast, he buys people free airplanes and stuff, so I don't think I'm going to compete there, especially not talking about life insurance. Anyhow, if you want to watch the videos at Crowe Medicare or just Google YouTube Crowe and Associates. So having said that, let's get started. So today we're going to talk about life insurance. And as I mentioned earlier, this is probably geared more towards the person who writes it here and there. But I will try to put some things in for those who write it more often. I'll go over term policies in UL, talk about the underwriting with those policies and kind of what it's like now, what it's like out there with underwriting. Go over IULs. We'll go over a quote site review, so I'll review the quote site for you. I am going to talk about final expense in there. I'll show it to you if you want on the when I do the demonstration of the quote site. We'll talk basic underwriting stuff for those not familiar, so the exam, the MIB, the APS, driving record, that kind of thing. Start with term insurance. So again, there's a lot of term policy companies out there. We have a lot of them, and you'll see them on the quote site when I do the demonstration. A lot of it depends on the state you're in. Some term carriers are in most states, but a lot of them, for example, won't be in New York. New York's a tough insurance state all around, but there are some there. So term, you have terms that last, you do a 10-year term. You can do lower, in fact. You could do 5 or even annual renewable, but more common are 10, 15, 20, 25, and 30-year terms. There are a couple companies out there that do 40-year terms. Those were more popular a few years ago. It seems to have slowed down a bit, but there is such a thing as a 40-year term with certain carriers. One thing to be aware of if you don't write a lot of life that often is on term policies, you got to be careful and mindful of the person's age. So the older they get, obviously, the less length they can get on a guaranteed term. So, for example, I just gave you some examples here. A 65-year-old, the best they can do is a 25-year term. 70, the best they can do is a 20-year term. All the way up to 80. An 80-year-old can only get a 10-year term. Companies won't give them, in general, companies won't give them more than that. So when you have life insurance and term policies, you just got to be minded, it's really a pricing contest more than anything. The quote engine will do that for you. You'll see it's pretty interesting with the way the rates look with various carriers today, and I'll show that to you. But if we want to talk about underwriting, traditionally what we know for underwriting is standard underwriting. and that means they're going to pull an MIB, Medical Information Board report, so they're going to check their medical history. For example, if the person smoked at one point and told the doctor they smoked, they're going to be able to see it. They do a script check, and they pull a driving record. Why is that important? Well, if a person has DWIs or reckless driving, they're a risk then, and they'll probably get rated accordingly. On standard underwriting, there's an exam. So either you can order the exam, you can have Pinnacle order the exam if you want. But, what they have to have done in that exam, usually it's just pretty basic, like blood work and those kind of things, but it depends on their age, medical conditions, things such as that. People do ask the question, does the exam cost anything? No, the carrier pays for it. They'll do the exam anywhere you want. So you might get an exam done, and then your policy you can get an offer even in a slower rate, because maybe after they do the exam and they look at the medical history, then they want an APS, an attending physician statement. So that will slow it down even more. If the carrier wants attending physician statements from the doctors, it's important that if there's a primary, that the doctor's names are in there. And just be ready with an APS. It's a game of the carrier says they sent it to the doctor says they didn't get it. A lot of times the doctor's office will take their time sending the APS back. It can slow things down substantially, and it can be frustrating too. But that's standard underwriting. So in today's day and age with term, you'll see a lot of policies issued on an accelerated underwriting basis, or even sometimes an instant decision, which we'll talk about in a second. Accelerated speeds it up a lot. I should go back for a minute and say, when you do a standard policy, the going rate nowadays is 2 to 3 months. So by the time the medical gets done, if they order APSs, by the time all that stuff happens, for those of you who haven't ridden life recently, believe it or not, it is 2 to 3 months to get an offer. With the accelerated, obviously that's ideal and desirable. It'll be much quicker. You're talking within in a week, because on the accelerated underwriting, they're only going to do an MIB, a script check, and to check their driver's license. You'll get a decision in a week or so. Now, what happens if you talk to somebody and they say, hey, I'm healthy as a horse, I've got nothing wrong at all, but it turns out they weren't honest and they did have things wrong, or on the app they disclosed that things were wrong? Well, in that case, then the carrier can say, well, we're not willing to offer this on an accelerated basis. We want to do full underwriting, and an exam needs to be ordered. It does happen quite often. It's not a rare thing for that to happen. So if that happens, you're going to need a medical, and then again, you're back to the 2-3 months thing to get an offer. But if the accelerated goes through, if they're relatively healthy, have a decent driving record, you can get an offer within a week, sometimes less. Some of these carriers now, and as you'll see, when you quote these on the quote site, it will tell you which carriers are eligible for these different types of underwriting. Some of the carriers now do instant decision, and as the name implies, it's instant. So when you go on the quote site, you quote, it says eligible for instant decision. There'll be almost every company does accelerated now. Not as many will do instant, but you'll see them on there, the ones that do. If the person's 60 or older, they're not going to be eligible for usually accelerated or instant. But if they're under that age and if they're healthy and they're eligible for instant decision, you can get an offer right then from the carrier, and you could bind it right away. So, these life companies you hear on the radio and see online, that's the majority of what they're doing is trying to get people approved on an instant decision or accelerated basis. They will do standard underwriting, but they're not very patient. It's a conveyor belt. They want to rip people through. So really, that's what they're keying on, are the quicker issues. I forgot to mention, or maybe I did mention one time, but if you have questions, please feel free to send them into the webinar, and I will answer them for you when we get there. Okay, UL policy, so universal life. Basically, a universal life is a permanent term policy. It's going to be more expensive because it's permanent. It doesn't have a term, doesn't expire after 20 or 30 years. You can run ULs out to guaranteed issue basis or guaranteed basis. Premium stays the same for as long as you want. You can go up to age 90. You can go up to age 121 on a UL if you feel like it. One thing to know about ULs is they are permanent. Rate stays the same, but they will not build much cash value. Sometimes they'll illustrate that they will, but they won't. Just to let you in on that. So I wouldn't sell them as that kind of policy. I would just sell them as a permanent, basically a permanent term policy. People will go with ULs because sometimes somebody wants a permanent policy, but they don't want to pay the premium associated with a whole life or an IUL. Or maybe they don't like the risk or variability of an IUL. So you'll see ULs used for second to die policies a lot. You'll see put in trusts, something where you don't have to worry about it not running well or expiring, and it's just permanent insurance in place. You can quote ULs on the quote site, as I'll show you. Same deal as with term. You've got traditional underwritten ULs versus full medical versus accelerated instant. So you'll see which ones are eligible. Obviously, if you can get it on an accelerated or instant basis, that is a lot better. The quote engine will show this, but people always ask, well, how much more does a UL cost? This depends a little bit on age, but it costs about the same, about 2 times the amount of a 30-year term. So obviously you can see the appeal of term too. Some people are of the mindset, I'm simply going to have term to cover my liabilities. I will invest the difference. Quite frankly, a lot of people aren't disciplined enough to actually invest the difference. But anyway, that's the idea. But the UL will cost in general, about 2 times as much as the 30-year term will, which you'll see on the quote engine. I do see some questions coming in, and don't worry, I'll answer them at the end. Okay, we offer a full chassis of IUL products. So indexed universal life, some people think you need a Series 6, a 7, a 63. You don't. With an IUL, it is still a fixed product. It's indexed. So you just need a life license for it. You don't need a 6 or a 63 or 65 for it. IULs are popular. One of the problems with an IUL is you can't quote it on the PFS quote site. So iPipeline, which is what PFS uses that you have access to, I won't quote IULs on there. The way you quote an IUL is either through the carrier's portal once you get set up. So, each carrier's portal, you got to go in there and quote IULs when you want to quote IULs because they have more variability. Or Pinnacle will quote it for you if you'd like, run you illustrations. Pinnacle uses WinFlex. That's a program they have, and they can run the same. It's running the same IULs as you'd run through the carrier portal. So with an IUL, the variability on it is the indexed crediting method, similar to the crediting methods on an indexed annuity. So, you might put somebody in an IUL and there's some risk there. You need it to run well based on market performance of that index for it to look good down the road, look as illustrated. IULs commonly will have a point-to-point with a cap. So maybe they'll use the S&P. It'll have a cap, maybe it's a 12%. So you get 100% of the S&P point-to-point up to 12% cap a year. They also have a variety of risk control indexes. I have never had good luck with the majority of risk control funds. They sound great. They'll say, hey, this is an uncapped crediting method. Use this one. Use the Morgan Stanley. Use the BPB. Use all these risk control indexes. But they're so risk controlled that they usually don't perform very well. So I usually like the point-to-point on the S&P. But you've got a million different crediting methods. You got monthly average, inverse accounts. They'll show you a history of how they performed on there. But basically, you put somebody in an IUL, and the policy is going to go as the index crediting methods go. So maybe the company runs it at 7% or 6% illustration, running it at projected at that percentage. Just got to be aware, IULs can lapse over time. A lot of the companies will say, well, don't worry. If this doesn't run as we illustrated, a lot of the IULs say it can't run worse than a 4% credit every year towards the interest. But most of the IULs out there, if they run at that minimum of 4% a year, they will lapse at some point. We've certainly had over the years a lot of IULs run really well, but if the timing's wrong, you can have IULs blow up on you too. So, not talking badly about IULs. They certainly have a purpose. They're very popular, but they aren't foolproof. And again, if you want an illustration for that, run it on the agent portal for the carrier or have PFS run it for you. Whole life, very similar, except for whole life is much more expensive. and whole life is doing things on a guaranteed basis. So they have a guarantee in the whole life of the cash value. They're more predictable. And then they'll have a current rates it'll show you. So it'll say like Mass Mutual, for example. Okay, here's what you'll have for cash in 30 years on this policy at the guaranteed minimum that it can run. But if it runs at current, here's what you'll have in cash if it runs at what it's been running at for the last 5 years. Whole lives cost a lot more, but they are the concept of build up a large cash value. It will pay for the policy, and then you can take loans interest-free, income tax-free, out of the policy down the road. Sometimes whole lives are used as kind of alternative or additional retirement options. Pinnacle can quote you from their office. They can quote you Nationwide, Foresters, and Americo. Crowe has a Mass Mutual contract, so we do have a contract with Mass Mutual. They're a mutual company, so they will have dividends that pay on that policy. Mass usually does run pretty well when you could just compare them at guaranteed values head up against others. They usually look pretty good. So we have that. So if you're interested in whole life, you can do any of the three from Pinnacle. We have Mass as well. I will warn you though, Mass is with the kind of the negative of Mass Mutual is the commission is not as high. I'm going to talk about that now though. So what are the commissions on these products? Well, it depends on the company and the company, the product, and the state. In the world of term, outside of New York, because New York's always lower, when I put that 75% in there, that's usually New York numbers. But you'll see commissions as high as 110, even 115 sometimes on term policies. Street commission, meaning you don't have to show, they'll give you that to you right out of the gate. For example, a 30-year term will pay a higher comp than a 10-year. So maybe you set somebody up at 100%. You say this is a 100% commission contract, and they write a 10-year term, and they're like, well, I only got 85. Well, that's because it was a 10-year term. It'd be 100 on the 30, or even 100 or higher on the UL. So universal life commissions are usually, I put 90%. That might be low. Depends on the company in the state. But ULs will range. The worst companies will run them at 80, commission. The best will do 100, maybe a little more. And then whole life, what's unique about whole life is it tends to pay more in renewals. Not a lot, but more than the others do. But the initial commission on whole life is lower. Like Mass is in the 60 range. But they range from 50 to 90% depending on the company. All our contracts are street. You get paid direct by the carrier. We are not paying you. And you'll always get at least the commission level that the carrier would offer a direct agent. Higher if we can do it. If you have production you can show, we can sometimes do higher. If you have a lot of production or sub-agents, we can do GA, the equivalent of like a GA, MGA, SGA level. And then finally, I threw final expense in there. I just don't want to confuse people. Final expense is higher comp. On the low end, for a regular final expense, maybe 90%. On the high end, 115, maybe a little higher, except for guaranteed issue. Sons of Norway had a really competitive guaranteed issue. The comp was super low on it. It's like 40 or 50%. But you don't have to worry about it because they don't offer it anymore. The rates are a little too low, I think. And then you've got like your Gerbers and your AIGs of the world that are, Gerbers like 60, AIGs like 80% on commissions. Okay, again, underwriting. I mentioned the instant decision. I'll say that again. You'll see it when I run the quoting site that you all have access to. I'll show you. It's instant. They need to be relatively healthy, little history, clean driving record. So if that's the case, you can quote them that. You can or have them apply rather, and then get a decision right then on that. About 80% of cases that are applied for as instant decision, they get it. The other 20, they'll either get declined, or the company will ask for a medical exam to be done. Accelerated underwriting is good too. It's not as fast as instant decision, but again, there's no medical exam. On accelerated underwriting, a lot of times they will ask some health questions on the app, or they'll do a phone call sometimes, believe it or not. So they pull an MIB, script check, look at the driving record, might ask some health questions, and then you'll have an offer from them within a week. If they don't like what they see initially, then they'll come back to you and unfortunately say, well, we're not offering accelerated for this person. We want a full medical. And that might be somebody who is healthy, relatively speaking, but has a history. A lot of times less for that, or maybe somebody who had health conditions they just didn't initially kind of reveal to you, and then they see it when they run the script check or the MIB. And again, when you need full underwriting, you have to order an exam. So you order a paramed, for example, you can do it. Pinnacle will do it, or an FMO for that matter will do it. If they don't like the exam, then they're going to order an APS from the doctor, or maybe multiple doctors. And again, that will slow it down, and you'll be talking a couple months, maybe 3 months even, to get an offer. All right, contracting. So this is a big area of confusion for people. Keep in mind, some states are same-time states, meaning they say you write the app. They won't contract you. We'll submit your contracting, but they won't process it until you write your first app. So some states and carriers are same time. So what will happen sometimes is the agent will say, contract me with Transamerica. And then they never hear anything. Well, they didn't hear anything because Trans is sitting there waiting for them to write their first app because it's the same time state. We can fill you in on that. And then in other states and with some carriers, they make you get contracted first before you can write. So that does cause some confusion with people a lot of times. If it's a situation with the same time state, a lot of the companies will not let you do an online enrollment until you write your first case. I shouldn't say a lot. Some you'll submit your contracting and they'll say, okay, great. If you want to do your first case online, you can. Others will say, well, you can't do the online until you write your first case. In either regard, we can set you up to do it online or get you the paper app if needed for that first one. When it comes to following up on life cases, for those who haven't done it a lot, one of the problems with life is there's a lot of follow-up on fully underwritten life, even sometimes on accelerated. So what you find is there's a couple schools of thought here, kind of 3 ways you can go about it. When I say serious life producers, what I mean by that, serious life producers, I mean people that write life every day. If they're writing life every day, what they usually do is they will check their own cases, meaning they'll put an app in with a certain carrier. They can get into that carrier's portal because the carrier puts the updates needed in that portal, and they will check it every day or every other day. And there will be a lot of things that the carrier will want. Maybe there'll be 4 or 5 things they didn't like you put on the app. Maybe the person wasn't born in the country, but they've been here forever, but then they still want a foreign national form. There can be a variety of things. So most life cases, on a fully underwritten basis, you put them in, and if you just sit there and hope it goes through, it's probably not, because it's going to get hung up where the carrier wants something. So one way you can do it, like I said, is if you write every day. I see the agencies that do a lot of life insurance, and they usually have somebody in the office, or the agent themselves is checking every day or every other day to see what the carrier is asking for. The other way to do it is Pinnacle certainly will provide updates. So if you want, as an agent, you can write a life case and then sit back and wait for Pinnacle to let you know when the carrier wants things. They offer the service. I'm not a huge fan of that. Suddenly you're putting a middleman in the mix. It's going to slow things down because somebody at Pinnacle's got to remember to go in and look and see what the carrier is asking for. They're just going in your portal to see it. So they got to go in and look. They see what the carrier wants. They relay it to you. Maybe they're delayed getting it. Maybe you're delayed responding to it. It's done a lot, but I'm just not a huge fan of that process. But the other thing you could do if you want, maybe you're an agent who just does life here and there. You write a lot of Medicare business, let's say, or financial planning. And life is kind of an afterthought. You don't have time for it, and you have to place cases. In that case, Pinnacle has a 2-page drop ticket. You fill out, or have the client fill out 2 pages. It can be done online too. They fill out 2 pages. You send it to Pinnacle, and they take care of it from there. Now, what's the most foolproof way is writing your own, checking your own for updates. But again, if you don't have time for it, you can do the 2-pager, and Pinnacle will handle everything, including ordering the medical and doing all the follow-up. really how I see it. That middle option of submitting it yourself and have Pinnacle providing you updates, I'm not a huge fan of. But I could be biased when it comes to that. I've worked with 4 different FMOs. 2 were specific life FMOs. And that process of me just submitting cases and letting them update me has never gone smoothly. After a while later in my career, when I was writing a lot, I was checking in the portals for the updates myself or had my office doing it. At this point, since I'm running the agency and I don't write much business anymore, but if a case just falls in my lap or a friend wants one, I'll just do the 2-page drop ticket and give it to Pinnacle. Anyway, those are my thoughts on that topic. Okay, quoting on the site is very easy. I'm going to show you how to do that in a second. The website is pfsinsurance.com, and you'll click on the Quotes tab. Be aware you do need a username and password to get into the Pinnacle site to use this. It doesn't cost you anything. You just got to call us, and we'll get one for you. Whenever somebody has a contract with us, they automatically are given a username and password with Pinnacle, which is emailed to them, but often it goes to spam or something like that. We can remind you of what it is. So if you need to get in there, let us know. There's a final expense quote on there, quote engine on there as well. It's just a different tab. I'll show that to you, and that'll allow you to quote all the final expense, whether it be, traditional instant death benefit final expense without grading, whether it be graded, or maybe it's guaranteed issue. There's a tab in there to look at all the different plans. For those people that write a lot of final expense, I would recommend Best Plan Pro. That does cost money. It's about $20 a month. I think I know Pinnacle subsidizes it. The reason you might want to use Best Plan Pro is because not only can you quote on there, but it will port you over to all the carriers' online enrollments and phone enrollment systems. And then really more important than that, in my mind, is Best Plan Pro. If you put somebody in who's taking medications, who has health conditions, maybe cancer history, instead of you pulling underwriting guides like you would have to on the regular quote site on Best Plan Pro, it will immediately just show you the best offer that company will give them based on their health conditions. But that would be, I would say, you'd make that investment in Best Plan Pro if you write final expense often. If you're just writing other lines of business and one falls in your lap here and there, then you probably don't need it. You can just use the quote site. Okay. Hopefully I kept that fairly short, 126. I went over a little bit. What I'm going to do is I'm going to check for questions, and then I'm going to do the quick demonstration on the quote site. Okay, so let's see what we got for questions. During the underwriting process, will an underwriter track whatever the applicant is doing as the underwriting process is occurring? Example, application is for a non-smoker, but purchasing of tobacco products can be detected. No. They can't detect things being purchased, but they will be able to see smoking history if that person ever told their doctor, because they'll pull that and find it on the MIB. What is my opinion of GUL? It's not bad. It's just the situation you use it in for a guaranteed universal life. It's, you can run it. We might use the term UL or GUL. They're really the same thing. I mean, you can do a UL to age 121 or a GUL. So my opinion is just the situation, and is it called for the situation the person's in, really. But they do what they say. I mean, they are a permanent policy. The premiums won't change, and it's not going to lapse as long as you pay the premium. Okay, somebody said, many of the UL policies I sold 40 years ago because of loans will lapse. In some cases, they have in a few years. The internal cost of insurance overtakes the premium. I replace most any IUL I find. It depends. I mean, loans will kill IULs. You really shouldn't be taking a loan out of an IUL initially. IUL should be on the books for many years before a loan's taken out. An early loan will crush an IUL. And bad luck will crush an IUL. Maybe you put somebody in an IUL and the market is down 3 years in a row, or not good 3 years in a row, and they run at the 4% minimum, that IUL is not going to perform. It's not going to recover well. On the flip side of the coin, you put them in an IUL and they get lucky and they get 3 years of really good market returns. They're off to a great start. That IUL is going to run. But any of those scenarios, if you take a loan out in the first 5 or 10 years, it's going to crush the cash value. I think that's all we got for questions. I had a comment in there, which was fine. But no other questions there. So if we don't have any other questions, I'll go on the quote site and show it to you. Let's take a look here. If I can get out of this illustration. There we go. Okay, let me show you really quick, guys. So all you do to go to the quote site is www.pfsinsurance.com. There's the Pinnacle site. It will ask you for a username and password. Mine's just going to automatically log me in because I use this computer constantly, more than I should probably. And you go over to quoting. And here you can quote everything. I'll just mention it. If you go to annuities, that's going to be Annuity Rate Watch. It will, it'll quote and compare MIGA's fixed annuities. It'll quote and compare income riders. It's amazing, Annuity Rate Watch. There's the final expense engine right there. And for this, we're going to just go to the term GUL. And I'm just going to run the example. I mean, the ULs and GULs run the same as the term. It's the same process, but I'll just show you quick how to do it. That way, if you want a life quote, you can grab one. Or, we'll happily give you one, or Pinnacle will, but it'll probably be quicker this way. We'll just do a quick one here. 226. Just a couple things to show you really quick, and then I'll end the presentation. But all right, male. We'll go Connecticut. All right, so I put in my age, my gender, my state. I'm going to go with, I can choose what kind of policy I want here. I'm going to go term. I'll choose my term length. I can do multiple if I want. I'll go 30-year, but I also could choose 20 as well. And I can do multiple death benefits. We'll go $1 million, and we'll go $2 million. All right, now down here I can put in the health condition of the person, and it will pick a rating for me, or I can click this other box in our health class and then choose the class. So maybe I know the person, I talk to them, ask some questions, I'm assuming they're being truthful, and I think they're going to be a preferred. Or again, I could enter their health profile information, medications, and health conditions, and it'll pick one for me. But we're just going to go with me choosing it for them at this point. Just click it, I hit run. And there you go. So it's given me the 20-year. I can toggle to the 30. Stick with the 20 for a minute. I can switch my premium from annual to monthly. And there's the part where I was talking about where it'll tell you when you run it, if it's, like for example, the John Hancock, which priced out the best, it's eligible for accelerated underwriting for this person I put in. Okay. Banner does both, accelerated and instant decision. Protective is doing nothing other than standard. Not too bad for them. But as you go down through, you'll see, and as I talked about before, a lot of them are accelerated and not instant. Now, if I want to toggle to the 30-year, I just do that, and it will give me the rates and the quotes right there. Same thing, if I ever wanted to go back, for example, I can compare these. I can make a ledger sheet, which will get a comparison that I can save and send to people. If I go back to my search results, I could switch it, and I could go with we'll just do guaranteed UL, for example. Full pay, selected death benefit. Actually, you know what? Here we go. We'll go GUL. 121. I'm going to choose. So it's going to mature at 121. I got $1 million and $2 million for a death benefit. Same information. I'll leave everything the same, and I'll run it. And there you go. So I ran it to age 121. I could have chose multiple if I wanted there. I could do to age 105, to age 100. It'll add those tabs for me. As you can see, it changes the price a bit the longer it runs out on a guarantee. Age 121, I usually feel pretty safe. And it'll show you your premiums for that product on a monthly basis. As you can see, it's a lot. Since it's permanent, it's a lot more expensive than a term. Let's see. And that's about all we have. Now, really quick, I want to show you. If we go to final expense, this one's really quick, so I just want to show it to you briefly. So this is FEX quoter. You can do the same thing. We'll put in somebody who's born in 1960. Now you can choose. You can obviously choose the state, put in their date of birth, gender, tobacco, yes or no, the amount. For this one, I'll go 15,000. And here's the one people don't see is you can choose the type of final expense, level, graded, modified, guaranteed issue, for example. Let's go with the level, get quotes. It's quick and easy. So Sons of Norway, they're always the cheapest. And this is for level. They used to have by far the cheapest guaranteed issue too, but now they don't offer it on a commissionable level. So kind of takes the fun out of that. So there's our GI. Like I said, Sons of Norway used to crush everybody, but now it's back to Gerber and AIG. If the rates come out the same on these two carriers, which sometimes they do, default to AIG, their comp is about 20% higher. I myself, my office, or Pinnacle will make you aware of things like that for sure. Got another question here. Somebody said IUL is the chassis behind Be Your Own Banker or Infinite Banking. Do you think these are legit or just marketing terms for IULs? It depends. It depends on the crediting methods you choose and luck. I mean, if you hit it right with an IUL, you choose the right crediting method, and you hit the market right. So your first few years you started off on the right foot, it can work. Just the thing that worries me sometimes about IULs is they say, well, they illustrated at 7%, and they say, well, the worst you can do is 4%. But if you run illustrations and you can tweak them and run them, and that IUL for a lot of those years runs at the minimum at 4%, those things will lapse at some point. If they run as illustrated, then you've got no problem. So they're not a variable product, but there's variability in how they run. So if you got somebody who is willing to take that chance and wants to use an IUL for that, then that works. If somebody's just looking to cover a liability, that's a term. If somebody's looking for something guaranteed, that'd be the GUL. Looks like that's all we have for questions. I appreciate you coming on today. I don't want to run this any longer. This went longer than I had anticipated. But I appreciate you coming on. Thank you for the questions as well. I hope everybody has a great long weekend. And next week we're doing a webinar on Medicaid redetermination. Really hot topic. I have a short webinar I did a recording of. We're going to play that next week. And it breaks it down completely. So if you have any questions about that, they'll be answered on that webinar for sure. Other than that, appreciate you coming on. Call our office if you have any questions, and hope everybody has a great weekend. Thank you.